In today's video, we're going to dive deeper into Tesla. Post earnings, the volatility inside of Tesla is starting to pick up. In fact, we can see that very easily with all of these gap ups. The first gap up after earnings, the second gap up after this weekend in which we had news come out of Elon Musk visiting China, and the positive sentiments there led to this gap up. Now, this gap up also led to a short side setup, and that's what we're going to focus on. But before we do that, let's set the stage with what was happening as we headed into this volatile period. We had 3 different Fibonacci levels that we had drawn, really 4, but I'm going to ignore that 4th one. It was way down here near the $50 price mark. The first Fibonacci level was closer to 180, and we broke that fairly quickly. You can see that right here. This was the first level. The second Fibonacci level was near that 146 price mark, which we tagged nearly perfectly into earnings, and we've bounced up since from that 146 level. The third cluster was down here near that 100 price mark, which if earnings had been a poor earnings, which even though it was, we didn't see that serve as the catalyst, would have taken us there. At least I thought it would have taken us there. Now instead, we saw Tesla have a reverse move here with a lot of bullish gap ups. So if we start to dive a little bit deeper into this volatility, that's where I think the live scanner really helps you make sense of this. If we start by taking a look at what appeared on the live scanner on our overlap tab today, the overlap tab is where we have an hourly volatility box breach happening at the same time as the daily volatility box breach. You can see just how much Tesla dominated that overlap tab today. All of these are Tesla bearish ETFs, and you can see all of them set up for long side setups, meaning Tesla, the actual underlying, was setting up a short side setup. Let's focus in on Tesla in itself, since I imagine most of you are looking at that chart as opposed to some of these ETFs. If we come into an intraday chart here with our volatility box models loaded on, you can get a better idea of the volatility we saw. Pre-market, we had this strong move up. As soon as the bell rang, that volatility contracted just a little bit. You can see that right here with price action pulling back, chopping around for a little bit. Now after that 7:30 a.m. mark is where this buy-side rally kicked into gear, and that's where Tesla started to see some strength, some buyers underneath it. Those buyers brought price action all the way up, first into our aggressive volatility box models, which was near that 196 price mark right here. And the second level that we had was our conservative volatility box, which is ultimately where the buyers exhausted. Right around that 200 price mark, but a few dollars shy of that, near 198. Now you can see how price action inside of Tesla rallies straight inside of the aggressive and the conservative clouds, and all this time you're starting to see signs of us officially being in overbought territory with these red arrows. That's the edge signal confirmation, telling you that we're officially now in overbought territory. The first time we saw momentum cross was this candle right here in the lunchtime hour. That was 9:32 a.m. Pacific, and we can see that bearish momentum cross. Now during that lunchtime hour, you can see how price initially has us puke, but we still have that back and forth. It's not as clean as you would expect. Right after that lunchtime hour ends is where you can see the selling actually kicks inside of Tesla, and that's where you get a bulk of the move. This is that post lunchtime hour, you get that move right back up to the aggressive volatility box models, and from there you get some of the sharper selling activity. So Tesla is one of those stocks which is very much starting to kick into full gear with its volatility. We saw that today on our live scanner on the overlap tab for all of the bearish ETFs, along with the actual underlying for the bearish setup here, which was a short side setup compared to the bearish ETFs, which were long side setups. So take your pick, but if you are looking at trading Tesla, you can see how that volatility post the earnings period is really starting to pick up and giving us some nice opportunities to take advantage of some short side moves as we head into that 200 price resistance level. I hope you found this video useful. For those of you that enjoy trading Tesla, definitely one of those stocks worth paying attention to, especially if you like to trade volatility.